Yo, what's going on, guys? Welcome to another video. Today's video is just going to be a quick case study on GJ, what I see happening in the next week regarding GJ and stuff, yeah. So overall, this week was not the best. We did still come out basically at break even. I'll make a different video on that, but yeah, the week wasn't that good. So now regarding GJ, now before I did create the course and everything, I had a personal buy position open from here, right? And obviously I was targeting the next high, which was 408 pips. Now the reason I was looking to enter right here is one, because this is that last higher low that the market created and then followed it up with another higher high, and obviously we have that continuation of structure, which is a pretty clean, basically tells you that the structure of the uptrend is going to continue going higher, right? Because we know higher highs, higher lows. If the market is creating higher highs and higher lows, it's going to continue that. Overall, it's going to continue going bullish. So that's why price came back down to fill in this institutional candle, because this is at the start of that major move up. Now, after we did tap into the IC, we had a schematic, whatever. But as soon as we did tap in, the market, quickly went up. It didn't really give you any deep retracements, right? It literally just went up, consolidated, went up, consolidated, went up. And if we label this by like the cycle, we can just show this as the expansion, and then this could be like the manipulation, I guess. And then I hate doing this because it takes so much time, but yeah, you guys get the overall idea of like what I'm saying, right? So we have another manipulation zone right here, and then finally we have that last expansion move up. So this is basically our institutional market cycle. And you can kind of see how price, slowly made its way up. It didn't quickly go up, but it went up, right? Went up, consolidated, went up, consolidated, went up. Now, as soon as we went up again, this is where we did consolidate, but this consolidation was different, because this consolidation was followed by a downwards directional push, right? So it was followed by a downward directional push now. So what does that kind of tell you? Is that the right color? Let me just quickly check. Okay, no, I'm using that color, my bad. So I think it was this. No, it was like this. Yeah, there we go. So we're followed with this downwards move, and that kind of tells you that okay, structure is now slowly pushing down, right? And then we can say that after price did make its move down, this area of consolidation, there was an institutional candle it did tap into. Now this is what my mindset is, or my mentality is. If GJ has been tapping into ICs before and quickly pushing up, it didn't make deep retracements, it just tapped in and then went up. Why would GJ tap into this IC, go up, and then make another deep retracement? It doesn't make sense, right? Logically it doesn't really make sense to it just sounds like this might not be the overall IC that GJ wants to use. So, and overall we can see that structure on intraday time frame is slowly switching from bullish to bearish as well. Now this was the retracement, so I'm going to put that in purple. So we did retrace, and what I'm basically anticipating is that this retracement is going to finish, or sorry, not this retracement. The market is after it did finish retracing, it did end up going down again, right? So really we're kind of in a range from this low to this high. That's basically the trading range right now. Remember, because we created a low, this isn't a lower high until it creates a lower low. So technically we're in a range from this to this. Now because we did break structure on GJ red over here, remember this is intraday kind of, because we like to trade with the higher time frame. So the daily is still bullish, but the 4 hour for the time being is bearish, right? So we did get that break of structure right over here, and then price taps into this institutional candle, whatever. The market pushes up, taps into an IC, and then goes back down. Now, one thing that I am, slowly realizing is if you go down to the 1 hour time frame, I think it was the 1 hour, or maybe it was the 45 or the 2 hour. Yeah, I'm gonna say the 2 hour one. So at the start of this, or at the end of this retracement and the start of this move down, there is a pretty clean 2 hour institutional candle. Now I'm gonna mark this up right over here. This 2 hour institutional candle, it's really clean. Now we're gonna go zoom into this real quickly. Let me show you guys what I'm seeing. So this is our IC, correct? Let me just delete the range now, make this a little nicer. Actually, I'll just use lines, make this way cleaner. So boom, this is our IC. Now what's interesting about this IC is if we zoom into this like on the 15-minute, you can see a nice distribution schematic. So price pushes up and it finishes its it finishes its retracement over here and then continues going bearish, right? So let's look for the cause, let's look for the effect. So the cause of this entire thing was clearly due to some institutional candle inside of the zone. And right over here, we found it. We found this last bullish institutional candle. Last buy move before the sell move, and you can see it tapped in perfectly, right? Now, inside of the zone, there's Wyckoff happening, right? There's a nice distribution schematic. So I'm going to highlight this right here. And let's do distribution. And then let's go to Wyckoff. Let's just type in Wyckoff and let's just look at it. So let's look for the distribution range and let's copy it. So PSY, that's the first thing. So let's find our PSY. Go down to the 5-minute time frame and let's look for it. So the PSY is the last pullback before a nice push up that's followed by a deep sell side pressure. So this is that last pullback followed by a deep pull up and then a nice selling pressure comes in. So I would say, okay, this is my PSY. You're just mixing and matching. That's literally it. Just look at it, copy, paste. That's it. If we know what the PSY is, we know what the BC is, right? So this is my buyer's climax. We have our buyer's climax. Now let's look for the automatic reaction. So automatic reaction is like basically a push down and it generally quits or stops at the end of the PSY. So this is the PSY. I can say that my automatic reaction is right here, and then it's followed by a secondary test. So now the second, you can put your automatic reaction over here as well. You won't ever 100% be right with your Wyckoff. Like in the idea of placements, like wherever you place these terms, you're not always going to be right about it, but as long as you get the general idea of what's happening, it's okay. So you have your automatic reaction. I'll say, okay, this is my ST, my secondary test, right? Now, after the secondary test, you're followed by a sign of weakness. And we didn't get it right away, but instead we have a upper thrust because this move up closed above the buyer's climax. Just like over here, the UT closes above the buyer's climax. So this is my UT. UT. Boom. Right, this is really simple. I'm trying to make this simple as possible. Remember, all I'm doing is I'm just copying and pasting. That's it. It's just copy paste. That's literally all it is. We have our UT, and then after the UT, you're supposed to have a UTAD, but we didn't get that, right? And that's normal. That's fine. But after the UT, we got a sign of weakness right over here. The sign of weakness is basically this. So let me quickly break this down. When you do see Wyckoff happening and you see, SOW, let's assume this is our, distribution range or whatever, right? So you see this area of consolidation. Now, what you're also going to see is this little bullish uptrend forming, right? You see these higher highs, higher lows. As soon as one of these higher highs, higher lows get broken, that's technically considered a sign of weakness. So for example, like this, I would say, okay, price broke past this right over here. This is my sign of weakness, something like that. So in this case, you can see we have higher highs, higher lows. So for example, high, higher low, higher high, and then boom, we broke past this automatic rally or reaction, whatever you want to call it. So that's your sign of weakness. Now, BIS, that's basically sign of weakness. I'm just looking at this over here. Okay. So now when we do see, the sign of weakness, usually you're supposed to see a U-tab, but in this case it didn't happen, but that's fine. Instead, what price did is it just, consolidated for a bit, and then after the consolidation, it sold off. It broke out. It broke out of the range, broke out of the Wyckoff range distribution, and it started selling off. Now, like I said in my previous videos about Wyckoff, we're looking to get in on the LPS. Remember the last point of, I think supply it is for this one. Yeah, last point of supply. So the last point of supply is basically that last pullback before the continuation down that broke out, right? So right over here, we have that market created boom, pulls back, and then pushes back down. If you go down to the 2-hour time frame, it's a lot cleaner. You can see that this is our entire bullish candle. Now you could refine this. Definitely you would want to refine this, right? You don't want to be using a big zone like that. Refine it like maybe up to here. But you guys get the overall idea of why we're looking to sell GJ specifically here. And then I'll get into why we're looking to sell and where we're going to be looking to get out. Now, if this sell does end up playing out, which I do hope it does. And I did send this to the group chat already. Let me just put this over here, and then boom, stop loss at the high, 24 pips. And then first TP would just be down here, right? First TP down here, we all know why, because there is an IC candle over here. But either way, that's a 13-to-1, which is really good. Now, a long-term TP, if this zone gets broken, which I assume it will, we're going all the way back down here. And let me explain why. Like I said, if this point of interest was correct, for example, this was our IC, price tapped into it right here, and it went up. Now, as it did go up, it didn't just push up the way we were expecting like it did over here. It didn't push up, consolidate, push up. It pushed up, but it didn't continue with that push up. It stopped. It stopped like right here, and then it started going back down. So GJ is not known for this type of stuff. It's not known for price to, you know, push up, stop, and then go back down. It's usually known for tapping into an IC candle, then moving away from it right away. Now, if we look at the bottom, we can see that this institutional candle swept liquidity. You guys all know that confirmation, and IC that swept liquidity, right? So we see that there's equal lows over here. This move down cleared those equal lows. After we cleared those equal lows, we created another institutional candle right here. And it's untested as well, obviously, which increases the probability of that. So I'm specifically waiting for price to come all the way back down over here. Now, if we also take a look at the daily time frame, you can see that the true higher low is this. We have a high, higher low, higher high. So we can see that from, you know, from a really, really positional swing trade perspective. Just look at this, right? Like high, higher low, higher high. It's really simple. And, you know, there's a weekly institutional candle over here. So it makes sense for GJ to come down here and then continue with its bullish pressure. Now, if we go down to the 4-hour time frame, there is another zone that is, you know, pretty important, and it's this one right here. This last bullish candle or bearish candle before that major move up that did give us that continuation of structure. And this was equally as important, but this one would obviously be more ideal for us to be entering on. If I do take my Fibonacci out as well, from the retracement, low to high, I keep getting confused. We can see that this zone, the one that we're looking to get in on, is in the blue zone, and so is the second one. So they're both pretty important. They're significant, but for now we're looking to catch the sell all the way back down up to this point, and then from here we're looking to catch the buy to target all this liquidity over here. So that's basically what I'm seeing for GJ. I'm not really focused on anything else considering GJ. We can still take the sell, like I said, catch the buy back up, but that's all I'm really focusing on for GJ now. If you are looking to buy like over here, I would just say be a little careful, risk less. Now, with me personally, I don't mind waiting, right? I'm the type of guy, I'll wait. I have a good, you know, discipline in waiting and patience. But if the trade is a little risky to me, like it doesn't make sense, I won't take it. Like, to me, it's that simple, right? I just won't take it. Like this trade when I took before, let me go to the 4-hour. Over here, the reason I took this trade at the low, I caught it to the pip at the low right here, and I caught this major move up, is because this move broke structure. It left an institutional candle, it was clean. This move broke structure, left an institutional candle, it was clean. We missed it. If we caught the move up, it'd be perfect, but we missed it, right? We didn't catch it. So the fact that it's starting to pull back again, to me, it's like, nah. Why would they want to use this level again when GJ doesn't do that? In the history of GJ, have you seen this happen? You can see it just after it tests an institutional candle once. For example, right here, we test it, goes up, right? Another example. Nah, that one didn't play out. But yeah, you guys can see that it never ever makes a deep pullback unless it's like a long-term thing, like, you know, higher highs, higher lows. Like right here, we push up and it makes a deep pullback. But that's because it wants to test another IC. So it tested, you know, an institutional candle here, and then it continues going up again. It never makes deep pullbacks. This is unknown for. No one sees this stuff happening for GJ. So it's easily known as manipulation. So I'm not going to be buying over here. I'm selling this back down here. Now, one thing that I'm slowly starting to do is I'm, you know, just entering with limits, but I'm also using bigger stop losses. So I'd be using a 35 pip stop nowadays, specifically because using 2 to 3 pip stop losses are cool, but they're not sustainable. Most of the times you will get stopped out. It's happened to me. You will get stopped out off of the most smallest things, like not accounting for spread, right? It's happened to me. It's really annoying. And like, yeah, like smart money concept is not about having the best risk management or the best RR in the world. It's about just understanding the footprints of the banks. You don't have to be catching these crazy 2 pip stop losses. If it makes sense, I'll take it. Like for example, AUD USD, we caught a buy from here. Sadly, we did end up getting stopped out. But like this was a 4 pip stop because it made sense, right? But a lot of people got stopped out of this because they didn't account for a spread. So that's why I'm slowly, expressing that instead of entering, with these small stop losses, you could raise your stop loss, make a little wider, but make sure you're only risking 1%. So even if I use a 80 pip stop loss, it still equals to 1% on my account compared to like 4 pips, right? So hopefully this video was really educational. Take your notes, and I'll see you guys in the next one. Peace out.